Welcome to this video on how painful Trump's tariffs will be. Donald Trump has threatened to raise tariffs on imports from China to 60% and tariffs on imports from all other countries to 10%. The average US tariff rate would rise from 3% to 15%. The last time it was this high was in the protectionist 1930s. In the short term, high US tariffs will dampen Eurozone economy because they make goods manufactured in the Eurozone more expensive from the Americans' point of view. But in the medium term, other effects will offset this to a large extent. Firstly, the US dollar appreciates, which increases the price competitiveness of our products. Secondly, US companies have to pay more for imported intermediate products from China due to the 60% tariffs. This is a relative advantage for European Union goods on the world market. Thirdly, Chinese goods have to pay 60% tariffs and the Europeans only 10%. This is a relative advantage for European Union goods relative to Chinese goods on the US market. All in all, the Eurozone's GDP will be little affected, which is why we did not lower our economic forecast after Trump's election victory. Turning to the US, its economy would in the short run benefit from the diversion of demand to the US. This is why we had raised our 2025 US GDP growth forecast slightly from 2.0 to 2.3 in the morning after Trump's election victory. But in the long run, the US is hurting itself much more than the Eurozone. This is because the US imposes tariffs on all of its imports, while the European Union only imposes tariffs on imports from the US as part of retaliation measures. The entire US economy is thus withdrawing to some extent from the International Division of Labor. This is at the expense of US productivity. Productive US companies operating on the global markets are burdened, while domestically orientated US companies with their mostly below average productivity are supported. Until now, we had assumed that only the US would increase tariffs against all countries. In a risk scenario, however, this could cause all other countries to raise tariffs across the board. This would lead to a broad-based deglobalization and an attack on global trade that would not only reduce countries' GDP by a few percentage, but quickly by 10 or even 20%.